Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of The Options Playbook, and I'll be your host here for the next 25 minutes on Options Guide TV. That's what my guess would be. We do have NVIDIA's earnings day. Everybody waits for it every earnings season. I think they should make NVIDIA announce first so the rest of the marketplace can figure out. But they're always on the tail end of earnings season. Right now, NVIDIA is up 1.37%, so it's up $2.70. Stock is trading at 195.55. So NVIDIA has been in an area, it really hasn't done much. As a matter of fact, what I found very interesting today, going back and looking at the history of NVIDIA, is the expected move is only I'll round off to 5.5%. And normally the expected move is around 7.5%. So 2 percentage points off the expected move. And that's just, unheard of in NVIDIA. So what my outlook, and I kind of mentioned this on the last show, is, NVIDIA's always been a stock that the stock has usually had solid, stock has been a leader in the marketplace, and all of a sudden it's not. But the fact that when it was always a leader, after earnings, you would have the tendency to see the buy the rumors, sell the news scenario. And people would a lot of times take earnings as a means to take some profits on the stock. Now, in this instance, we finally got a situation where the stock has just been stagnant. And I think that NVIDIA's got potential to the upside. So I'm going to we're going to stay with our strategy that, we love, the open wing butterfly. But we're going to go really wide on our butterfly today. And that's one of the things that's wonderful about the butterfly is the flexibility that you get. So I'm going to go a short term out of the money butterfly. Not out of the money. I should say big, wide butterfly on NVIDIA, and that's going to be our paper trade for today. Now, that we'll show that one at the end of the show, but to start with, let's go and take a peek at Home Depot. So let's run to the Home Depot chart inside the Tradier Pro software. And you got a duopoly between Home Depot and Lowe's. So both stocks I should say it this way. Both companies' earnings affect each other's stock price. So Home Depot came out and announced, we knew they were going to announce on a Tuesday, and the stock reacted very positively and it pulled Lowe's up. And then Lowe's announced yesterday, and now that is pulling the stock down. So we've been very volatile over the last couple of days with Home Depot and Lowe's. To start with, our butterfly looked wonderful. And I want to talk a lot about just managing something like this over earnings. So here's the overall chart in Home Depot, and we're going to grab this small little area here. And you see earnings announcement, stock ran all the way up to $3.95. It closed closer to its lows. To its low. Interesting, I'm saying Lowe's. And then Lowe's announced, and now we're all the way back down below where we started before the announcement in Home Depot. So Home Depot looked really good, and now it doesn't. If I have that scenario in the options trading world, we looked at an open wing butterfly, very short term. And one of the things that butterflies like is if you are correct on your forecast, you'd like to have implied volatility come down. So many opportunities to get out and be very profitable on the Home Depot trade. Now, as the trade goes on, if you are above your strike price, you need your middle strike price of your butterfly. You need to not let the stock come down and go below that strike price. So we're okay as long as we're beyond, but you need to have a stop in your mind. I mean, if you're trading around earnings, you need to be in front of your computer. You'd want to get an alert saying Home Depot has reached this price, and then you want to get out of that position at that point in time. You don't want it to get negative on you. And even if the profit is not as much as you had hoped for, you still want to get out of that trade because you will be profitable on it. So I just want to emphasize that on Home Depot, if you've waited till today, until Lowe's earnings, now you're in a area that you don't want to be in. You're in an area of hurt right now. You do have the 200-day that's probably going to add support to it, and I do expect Home Depot to bounce back after this. Lowe's actually didn't have a horrible earnings report, but I didn't take the time to find out exactly what was said in the conference call afterwards that drove the stock so much lower, because it is getting beat up, and it's bringing Home Depot down with it, down 3.23%, or down $12.41. Now, I think part of the thing is that Lowe's did run up on Home Depot's earnings, so the fall off, I guess, is a little bit greater than normal, mainly because of the short little run up that Lowe's had. So let's look at Lowe's. LOW is a symbol. And I'll do the same little thing. I'll grab it right in this little area. So here's the run up on the Home Depot earnings, and then here is the drop off. And they're right at the 200-day moving average too. Interesting that we're both on the 200-day moving average. You want to do a straddle and buy the Lowe's put and buy the Home Depot call? That's an interesting straddle, interesting play, or short Lowe's and buy Home Depot. But the stock is, because something's going to happen. We're sitting right on the 200-day moving average there. And sitting on, I digress on our show, but we're also sitting right by that 200-day moving at. Oh, that's the 50-day. That's the 50-day here. So we broke below the 200-day. Let's look at Lowe's. Did I do that right? Okay, we're right on the 50-day here. That's not as significant. It matters. I mean, there is a potential for a bounce on the two, but if it was a 200-day, I would like my other trade. But we're a little bit overextended in Lowe's. Lowe's has had a good run. Look at the solid run up. A little bit of a pullback here, a little bit of support in this area. I do expect a bounce going into the end of the week. Okay, but let's look at the Home Depot trade, and then we'll finish up with, and we also got gold. We can take a peek at our gold trade too, which is doing just fine. Home Depot is here. Got our position in Home Depot. There it goes. Okay. So we're down here. We could sell it for 80 cents at this point in time. I'm going to let it ride. We will have a show on Friday, and this has a Friday expiration. I don't think I would get out right at this stage. I do think that the 50-day can help. It's not as important to me as the 200-day moving average, but you have it hanging right. We could get out and salvage the 80 cents. It's worth saving. There's still some premium in it. There's still some volatility. But when the stock came down and hit the 390 strike, that's when you should have closed it, no matter what. So let's go back to here. Check this out. Home Depot. So we ran up to here, came down to 390 on this instance. We really shouldn't have let the stock go below that. So you got up to 394, which is the high end of the butterfly. Came all the way back down. 390 is where you should get out. You shouldn't let it start creeping this way. And let's say you do fall asleep and you come all the way down to the 20-day moving average here. You're at 382. If you're anywhere between 390 and 380, you should definitely think about getting out. You get to 380, you should get out for sure, right? You don't want it to get below the long strike in your call option. But then you have, the big downturn of Lowe's, so you're going to have a gap down in Home Depot, so your opportunities are a little bit less. But you don't really want to let this stock go below. Anywhere above 390, we're fine, because we're profitable from 390 on up, the whole way up, all the way up to 450 if you want. We're still profitable on the trade. So 390 is kind of your stop point. If you put on these butterflies and you got the short-term expiration and it comes back and it hits your short strike and starts drifting lower, you want to get out of the trade. That simple. Okay, we'll leave that one be because we're going to do another one of these in NVIDIA. But let's jump back real quick to the gold trade. And we see that gold right now, A, B, C, D, F, G, there it is, 440, 477.54. I guess I could have shown it on the chart, GLD. But we had a little bit of a pop since we put on the trade, and we bounced off of this gold. Gold does trade overnight in that, so this is why you see the choppiness in the chart. That's why the candles are a little bit more choppy, and that does bring an inherent risk in that the GLD is an ETF that trades on the exchange, and the gold obviously is a commodity and can trade whenever. So with that said, we did have the move. We had to move up, got up to 481. We're now down to 477. And I actually added inside the portfolio, the official paper trade was the short put spread. Where's gold? Right here. Okay, this is the short put spread where we sold the 476 put and at the same time bought the 466 put. And I love this about the platform in that it separates out these trades, right? It's highlighting that this is a 3/27/26 expiration and this is the 3/6. So it's easy to see that you have two different expirations and two different trades. And we did this 476. We want the stock to stay above. Like that trade, got a lot of premium for it from 476 to 466, 10 points wide. I think we brought in $4.50 on it. Real solid trade. Now, on the gold side of things, we also came out and did a shorter term bull put spread, let's say open wing butterfly with calls. And in this instance, this is the bull put spread. In this instance, we need the stock to get above 480, and we got 9 more days to do it. So we'll look at Friday, we'll look at Monday, and then Monday or Tuesday, if things are just lingering and we're not approaching that 40-80 level, we'll look to probably get out of the gold trade. Okay. CME looks good. CME was a solid trade. Actually, CME's been really resilient. 319.21. It's up $18 on this. We sold the 290, bought the 280. We should have there's still some premium left in this. We got 23 days. We'll probably look to close that trade on Monday or Tuesday. No reason to rush right now. This market's up. Heading into the weekend, 170. There's still a little bit of premium. It's still worth waiting around for a little bit more time decay here. But usually when we get down, we probably started this trade, 35 to 40 days out, I would guess. And then usually when you get the time cut in half down to about the 20-day level is when we want to look to get out of the trade. But we look really solid on this. Obviously, you could let this one ride a little bit more because we're quite a ways away from the 290 trade. What's our JP Morgan trade doing? I've been struggling with this one. We're down 44%. The stock right now is at 300. Our strike is 290. We hit 290. We're supposed to be out, and we have hit 290. So ultimately, we should probably have gotten out of this trade. We obviously brought in a lot of premium here on this option contract that we sold, the 330. Actually, we had to roll that up because we actually hit the strike. We rolled it. This is all the way back. I think it's time to buy this to close. Let's actually do that. Let's get rid of this noise here. We're going to close at mid. Let's send that order to the floor. Okay, that's behind my head. You'd see that. No big deal. We just sent it to the floor. We'll keep that, and I'll make sure that gets closed by the end of the day. 36 cents. More than happy to close that out. And then that will free us up to be able to do whatever we want to do just with this option contract going forward. Netflix, a lot of news. Obviously, stock is popping, and that's odd in that It's popping because people are thinking that the deal with Warner Brothers is not going to happen. They got 4 days to respond. A lot of news on it, but this is the reason why I wanted to buy the Netflix stock outright. So we did the swap. Instead of buying the deep in the money option contract, we actually bought an extra 100 shares of Netflix, and I still like that trade. Walmart is up quite a bit. The delta's at 92. If this option contract with this position gets to 1, then we're going to roll that option. We'll probably might go up beyond June. We'll see what months are available, but we'll roll this back to an 80 delta and take the profits on the Walmart position. All right, let's look at any questions on any of those trades. Good morning, Erica. Thank you for popping in, saying hello. Anybody else want to say hello? It's always good to know who's out there. So I always appreciate, we want to make this as interactive a show as possible. And, you want to support the show. Let people know about it if you enjoy what you hear here on Options Guy TV. And also support Tradier for sponsoring it. Open up an account. Check it out. They got some great tools showing you an awesome portfolio page that they have all set up if you'd like to trade options. All right, here we go. NVIDIA, 196. Well, it's even up more. It always seems to happen, right? So now my trade's going to be a little bit off, of course. But 196.19, it's up $3.36, 1.74%, heading into their earnings report. And that's a little bit what I've mentioned. So let's start by looking at the chart. The fact, the exact numbers were 5.6% is what the expected move is today. Normal was 7.4%. But see the chop. See how much chop. I mean, this is a whole. You could even include it all the way back here. So we're going all the way back to we'll call it August. The beginning of August, we've been in an area chop. It wanted to break out, hasn't done anything, but we've had these areas from time to time in NVIDIA where we just get some chop and then it decides on a direction. Here it was down, strong move up. Now we're back to the chop spot again. So I do think that NVIDIA is going to do something. I think that we're going to have a decent move in NVIDIA. And if I were to just, first of all, look at the fact that NVIDIA is trading at the straddle, we're looking at the February 2nd expiration. The straddle, buying the at the money, we'll do that. Let's buy it and buy this. $11.80. Very speculative trade, and I wouldn't do the February 27th expiration. I would go out further in time. You have all the different March 2nd, March 4th, March 6th. You have a whole plethora of different expirations to choose from. I would look at just buying the long straddle. I would take the bet that the market's got the vol wrong, that after the earnings report, we're going to get more than a $11.80 move. I would probably go out a little bit further in time. You're going to have to pay up for it. But next Friday's expiration is, what day is that? The 6th. So it would be the 6th of March would be the next Friday expiration, and that's 9 days away. $195.8. Yeah, you're still, so the expected move in the short term is $11.80. That's what most people would quote if they're looking at an earnings report. If we buy, this is a little bit in the money, so it's a little bit off. But the expected move going out to March is 8 and 14. It's 14.88. That's a pretty big move. That's a pretty big move. Let's on the charts. You still have some premium, but you're going to get cremated on the vol crunch. So the high. Oh, we're right at that high. Look at that. We hit right at the top of that candle heading into earnings. And that goes all the way back there. We scroll all the way out. That's about it. Okay. Right here and right here. So the move to the upside, to the top, yeah, it's got 14 points in it. To the top of this recent high is 212. All the way down to here is 197. So yeah, interesting trade to do the long straddle in Nvidia. The fact that vol is not as high as it usually is going into earnings. That's an interesting trade. I'm not going to make that a paper trade because that's a very speculative trade and a fairly costly trade to do it. But that is an interesting one on Nvidia and earnings. And I don't like straddles around earnings because you do know volatility crunch is coming in. You have to get the move. If you don't think it can move as much as you're paying for it, you should never do a long straddle around earnings. That simple. That simple. The expected move, there's only about a 20% chance of it making that move in most cases by looking at the delta. And remember, it doesn't have any regard to direction. All right, let's look at our trade then. I'm going to run to the what if calculator. What expiration do I have here? March 6th expiration. Let's do the short-term one. I don't mind the price on this one, and I'll send that to the ticket. Let's look at this Friday's expiration. February 27th is the expiration date. And we'll look at this one. $197, 200, 14, 207. That's 10. Okay, we're going to go 10 points on this. See, so the market had already moved. I had that was when I started to set up the trade, we were at 195. I'm going to get rid of this trade. We're going to make it a 2-day trade. We're going to buy this one. So realize that this is an all or nothing type trade. Come on. There we go. Buying the 197, selling 2 of the 207s. And then we're going to stop short. We're going to go 5 points. So this is 10 points. That would be 5 points. I think I want to go wider. Let's go 12 and a half. Let's give ourselves some more upside. I like that. Let's go here. Get rid of that. Okay, we're going to buy you. We're going to go 10 points would be 207. We're going to do the 210. Sell that twice. It's going to add cost to it. It's going to add cost. And then we'll stop short 5 points right here. 345. Yeah, I don't mind that. I don't mind that. We could go back to the 200. All right. But then that only gives, let's stay here. $3.44. Let's send it to the what if calculator. Now, I would expect to be able to trade this at 344 right in the middle. I would expect to be able to trade it somewhere in that range. We're going to try to execute the trade here inside the Tradier Pro paper trading platform. So we're going to have to give up a little bit more, mainly because we're not trading in live markets. So I'm going to send this to the floor, and well, actually, the market's pretty tight. Let's just send it. Let's see what type of fill we get, actually. Let's send it at market. Never send market orders. Well, we'll hit the ask right there. 344. Let's do it. 1 by 2 by 1. Boom. Okay. Sent. Here's our trade. And once again, if you do this trade, they're announcing on a Wednesday. You have all day Thursday, all day Friday. So let's use this graphic to show the scenario that happened in Home Depot. So if after earnings tomorrow, the stock runs up here and it's trading at 222, awesome. You put the trade on for $3.44. You can make $2. This is the one you want to look at is the, we already filled on the butterfly, 220. we put it on for, we should be able to make, so we got 7.5 minus 5. 12.5 minus 5. That's 7.5. We got 7.5 minus the 304. So 409. So we're at 409 in that scenario here. And if we hit at expiration right here, our maximum's about 900. We'll call it 900 right there. And then on the downside, if we go below this, the most we can lose is 344. So if the market opens down, the most we can lose on the trade is $3.44. But if the market opens this high and it starts to drift, let's say, boom, we open 222. Market starts drifting down and we see it hit right here. And by noon tomorrow, it's trading at 210. We want to get out of the trade. Vol won't be all extracted from our short option contracts, but I don't want to mess with the stock coming this way, because it can come back hard. So if we open up and the market comes back down, well, and we see that direction moving, we want to get out of the trade. Now, here's where it's a lot more trickier, is what happens if we open at 206? We don't get the expected move to the upside and we open at 206. Well, if you're still within that range, you still got to worry about your risk to the downside. But if we're at 206 and the trend is your friend, you might stick around. But as soon as you see the market start trending lower, you want to get back out. You want to stay within this realm of profitability if you're doing a pure earnings play. Now, we got 2 days, right, on the trade. So we're not going to just ride it until the end on Friday. You're going to manage this trade and you're going to put that position on. Every day that goes away, though, you are short 2 of these option contracts and you want that to decay. Very interesting trade, just overall. All right. That's going to be our official paper trade. If you have any questions, please do put them in the chat box, but we are at time right now. So what do we got going forward? Home Depot, if you missed your opportunity, we're going to hang in it. We're going to hang in it in our paper trading portfolio because we only trade on Monday, Wednesday, and Friday. So we're going to hang in Home Depot and hope that we get a bounce off the 50-day moving average. NVIDIA, we're going to put this position on. If we gap open, if we gap down, you realize you're going to lose your investment. Very, very hard to salvage much of the $3.44 that you might have paid for the trade if we open down. And remember, you're managing this trade on your own on Tuesday. If you open all the way up, you're fine until it comes back down to this price and then start worrying about it and getting out of the position. But anywhere from this spot above and beyond, you're looking at making 409, at the expiration of that. So, solid gain if we blow the numbers away. And I think NVIDIA can move more than expected. So the long straddle is even interesting. And we'll leave it there. All right. Well, happy NVIDIA earnings day. And we will see you this Friday and review all the paper trades that we put on this week and the next edition of Options Guide TV inside the Tradier Hub, hub.tradier.com. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.